All right, guys, this is Paul Singh, the market speculator with bullsonwallstreet.com. Today, we're going to take a look at the FAANG stocks. That's Facebook, Amazon, Apple, Netflix, and Google. As you can see here, the market has pulled back from 295 down to 276. At one point, I think we were up close to 15%. Now we're down around 9%. And the FAANG stocks have been hit by a lot of the news that has caused this pullback, mainly the China trade war and then antitrust potential investigations here. So not a great time for stocks that have been market leaders for years. I mean, we could probably go back 10 years now, and the FAANG stocks have been market leaders, but getting hit hard. And what we want to assess now is at what point are these guys buying opportunities? In this past 10 years, if we pull back something like Facebook here, we can see here, and I'm not even going back 10 years, but say to 2012 here, every dip has been a buying opportunity. So let's see if we're at that level now. So we're going to take each of these guys and kind of assess where we are on them and where we could potentially enter these things. So first of all, let's look at Facebook. Let's start with the weekly and see if there's anything significant on the weekly chart. Now, I'm usually focused on the dailies, especially with the type of holds I'm doing, which are usually for the swings we're doing a couple of days to a couple of weeks, maybe sometimes a month or two. But with the FAANG stocks, while we could trade them quicker, a lot of times they are big trend plays we're doing. So we want to see on the weekly what type of move we're getting. As you can see here with Facebook, every pullback has been a buying opportunity. Now, what do we see here? There was a big pullback from October to December. On the weekly, we have a low here at 122. If Facebook gets crushed, and there's going to be a lot of ifs in here because we are not making any predictions. We don't know what it's going to do. We have to assess it and then go by what the stock does once it gives us a signal, and none of them are giving us signals right now, at least to the long side. So we can see here, obviously 122, 123 is going to be a very important level. If we saw strength at that level, that would be a great opportunity, low risk. We could put a pretty tight stop and lots of room to the upside. And then obviously we have these key levels where Facebook is actually testing the 50-day moving average on the weekly here, and potentially it could test the 200 in a little bit here in about 18 points. So these are basically the three key longer term levels we need to be aware of. And then if we look at it more on the daily, we are sitting at a very important level right now, which is the 200-day moving average. We don't want to see this level break. We want to see it hold. Now, one thing to remember, Facebook had really good earnings. So a lot of this pullback here is related to just bad news in the market environment in terms of China trade war and the new antitrust news. But actually, you know, it's had two good successive quarters, which makes it very attractive for a potential bounce play, but we need to see that strength. What I would really like to see is a little bit of a violation of the 200-day and then a remount at that level. That would give us really good risk reward. It'd shake out some players here, and potentially if we just move to, you know, this kind of moving average sandwich and move to the top at 180 here, we could get a 15-point move here for us with maybe 4 or 5 points of risk. So I really like the potential of a trade in Facebook, although nothing to do right now. I won't enter, even though it's good risk reward right now, I won't enter unless we actually get that signal that we're talking about. So that's the short term. And then remember where those levels are on the weekly as well. This is that low down here. I think we had a moving average right here around 145 as well. So now let's skip over to Amazon. And again, let's assess the long term first. Weekly, we have broke the 50-day moving average. So if we could remount this level, that would be fantastic. That would be almost a slam dunk. You don't even just think about it, entry. But right now we're kind of in no man's land, nothing to do. If it got really beaten down, and this would have to be really beaten down, we'd look for a test of the 200-day moving average. But right now, nothing to do with Amazon unless it comes back and can remount the weekly on the 50-day. And then if we look at the daily, violation of two key moving averages there, again in no man's land, nothing to do here unless it comes back and remounts the 200-day here, which corresponds with the weekly 50-day. So basically, this is the key level for us on Amazon. And until we see strength there, nothing to really do. You could potentially have a short trade here. but we're looking at this for long-term kind of trend buys, but there are actually short opportunities on these things. Google here, very beaten down. On the daily, we want to watch this 983 level, and obviously the round number 1000 is significant as well. That's the only real thing I would look to do with Google, and it's worth noting that the 200-day moving average on the weekly is around that level as well, and Google just doesn't violate that level. So we'll see if it does test that level, how it goes, but maybe we get a good opportunity at that point. Apple is interesting here. On the weekly, we really don't have anything until it hits 150, but on the daily here, if it's been very beaten down, but again, like Facebook, it's coming off strong earnings, and it's going down because of the trade war and because of the, I don't know if the antitrust affects it quite as much, but maybe it does. But I want to see a break of the 9 here. So again, a remount. If it breaks the 9 here and say we close at 179.50, we could place a stop of about 5 or 6 points, and we could get a target up at 190, which would give us about 15 points. So we're going to be getting about 3 to 1 on it if we can see some strength here. So watch for that 9 break on Amazon. Netflix here has been the strongest in terms of relative strength here. Has held up well above the 200-day moving average and is bouncing above that level. Let's look at what it's doing on the weekly, and it's sitting right at the 50-day on the weekly here. So of all of these, Netflix right now is positioned the best, is the strongest. The question is here, do we take a shot here or do we wait for a break of the 50-day moving average? I would probably wait for a break of the 50-day moving average. So patience here, and then if we see strength, maybe around 363, 364, we could enter, and that would probably get it back on trend for at least a test of the high, which would give us about 20 points, and maybe even a break of that level. So I think I've gone over all those: Netflix, Facebook, Amazon, Google, and Apple. Okay, so that's what we're looking to do. I think the main thing here is either these things get beaten down some more and we get a really good bounce play on the longer term trends, or we see some strength now and some remounts of these key, what were support and are now resistance levels. So keep an eye on the FAANG stocks. We could get some opportunities, but remember, don't guess. Wait for these guys to give you some clues, and wait for the market to kind of align with what we want to see with the stocks as well.